Okay, let's start with you. Exactly what happened with the trading? Where was the pricing? How'd they start out?
It's interesting because the range the company initially was looking for was between 19 and 22. It priced at 23, and now you see we're trading closer to that 19 level, so that lower end of the range. Now, where it priced, it raised $1.35 billion. It gave it a valuation of about $9 billion. So maybe this is a valuation concern. It is about triple what the company was valued at back in 2018. That was only $3.2 billion. But it is interesting to see a company that priced above the range trading lower, because Bloomberg actually did an analysis of the 25 stocks this year that have priced above the range. The average gain in their debut was 46%. So we're seeing a divergence here.
Well, another way to look at it, actually, there's a piece out of the Bloomberg that says it's the first one since 2008 that priced above the range and dropped, right, Sonali?
Super awkward because we saw the NASDAQ up this morning. What happened? And so, I mean, this is a really tough time for this to happen at a time where we have Cloudflare pricing. It was expected to be above its range as early as tonight. Let's see what happens with that. We have WeWork, which is already troubled, and then we have Peloton, which is on a roadshow right now.
Okay, so let's blame somebody. Is it the market or is it the investment bankers? Because right now it looks like the range was right, the price was wrong.
Well, can I tell you something? You look around and everyone wants to blame the investment bankers first, but you have a problem here where the market sentiment is turning away from growth stocks right when we're having these growth companies come to market. Bloomberg's intelligence analysts are expecting high growth on the top line, but again, as Kailey was saying, this is not a profitable company, so are investors becoming more discerning?
Well, profits got nothing to do with it, as far as I can tell, with IPOs, right? We're about profits.
Right.
Well, I do think it represents a broader sentiment shift, though, because our analysts here at Bloomberg Intelligence said when you're looking at that valuation, it's a little bit of a premium compared to their peers in this clear dental alignment space, but they think it's justified when you look at the growth trajectory. It has higher growth than many of its peers. They expected to have about 90% sales growth in 2019. So you wonder if this really is a fundamental issue or just a broader sentiment issue around these IPOs.
Well, growth projection with some possible regulatory overhang.
Yes, that's true. I mean, orthodontists do not like this company because it's completely upending the entire dental industry. And you actually have some dental boards in states like Georgia, Alabama, New Jersey implementing regulations that say you have to have a dentist present when you do these kind of 3D x-rays. And so that's a concern. It could raise litigation costs, but at the end of the day, does it really change the fundamental narrative of this company? I'm not sure.
Sonali, I also wonder, and we don't want to draw too many parallels with WeWork and stuff like that, but when you actually go public, you start taking a hard look at things, whether it's governance, whether it's regulatory problems like that. It's one thing to be a unicorn and have private people put money in, but when you actually file the SEC, then maybe people start paying attention.
People want better numbers on the bottom line, for one thing. People definitely want better corporate governance, certainly with WeWork. They don't like these dual-class shares, yet we've seen so many companies in the last couple of years really consider this model. Investors want more from the companies that are going public right now, and we're really seeing that turn right now with this company.